Okay, welcome to episode 3. This is episode 3. In this video, we're actually going to be going in and setting you guys up for how to actually get into trading. So you already know now your motivation behind this. You already know how to use TradingView now. Hopefully, I explained it pretty well in the last video, but if not, I'm going to walk you through even more in this video, basically. And I'm basically just going to show you guys how you're going to get your stuff set up for what we're going to do later down the line and how you're actually going to be able to progress from demo to actually moving on to funded and then hopefully accumulating funds through that way. And we're going to walk you guys through that entire process right now. So, quick and short video probably. If I ramble on for too long, it might get a little longer, but we'll have to see. The first thing that I want you guys to do is, as you can see right here, I'm on just my browser, not on any trading view or nothing. I'm going to get you guys to come over here to this website right here, forexfactory.com. This is the overall news platform that we're going to use. I'm just going to show you guys how to get it set up. I'll talk more about news in a later video. We're going to just bookmark this tab and we will come back to it later. But once you go to this website, it's going to pop you up right here. This is going to be the main page where you can see all the news that's happening inside the trading world, and inside trading, the thing that moves the markets the most is going to be news and news factors. There's only certain types of news that we really need to focus on for when we're going to be trading, and I'll talk about this later in a later video. Don't get too stressed about this right now, about this topic. But if we come over here to the calendar page, don't actually bookmark the home page, bookmark this one instead. What you're going to do is you're going to set up some filters right now. So we're going to go up to the top right here, where it says filter. You can either create an account or don't create an account. If you create one, I think it'll just like save your settings. But like I have one, so it'll save my settings when I log in on my phone and on my PC. But you can do whatever. You're gonna drop this filter down, and then you're gonna click none, and you're just gonna re-click USD, and then you're going to come over here, and you're going to uncheck this yellow folder. Then you're going to leave, actually you're going to uncheck this one too, and then you're going to leave everything else as is, and then you're going to click apply filter. Okay, and then you see a bunch of the shit that was on the screen got removed, and these are the main news drivers. The red news folders are the main news drivers that are going to drive the market and that are going to be things that you need to worry about. There's certain things that you need to worry about more than others, but again, not talking about it right now. But this is just how you should have this set up, and you should have this bookmark for now. Okay, next thing, we're closing off this. Next thing that I want you guys to do is you can either create an Excel spreadsheet, you can make like a Google spreadsheet right here. Anything that you please, just make a fucking spreadsheet. That's all you have to do. This one is burning out my retinas right now because it's in white mode. But basically, what I want you guys to do is I want you to set up a spreadsheet, and it needs to have just these as headers, and you're going to set those up. It's going to be the date, your win loss, your pair that you traded, so that's either going to be NASDAQ or the S&P, your bias for the day, what actually confluences you saw coming into the day, and we're going to talk about confluences more when we get into strategy. And then you're going to put down the amount of risk to reward that you have. Again, you probably don't know what this is yet. If you're just starting out, don't worry, just type RR or risk to reward. And then you're going to write down how you're feeling before, during, and after you traded. That's basically all. And then if we go back here, I can show you how I basically started off with like filling out this entire section. So you can see, put the date, how much money I won. I traded the S&P 500 or SPX 500. The bias, I was clueless this day. I'm pretty sure I had this like first day trading, so didn't know what the fuck I was doing. Didn't know the risk to reward that I had, and then I didn't write down anything there. But if you see, we wrote down every single day how I felt before, during, and after I was trading, and it cascaded from there. And then I made a new spreadsheet when I was trading fundeds, and that lasted until the end of the year, until I switched out over to like a actual trading platform that showed me my risk to reward. You can trade on one of these platforms, but it's not necessary for you guys to spend money on this and not be making any money at the current moment. You have to think about this like a business. So if you have expenses coming out of your account and you're not making anything, it's just you're running at a loss. Basically, you're just throwing money into the void for no reason. So I want you guys to start out on this, and then if you see some fancy tracking platform in the future, you know, by all means go and pay for that. But what we can do is we can go to file, we can download, and we can download as a CSV, and then you can go to your favorite ChatGPT, Google Gemini, anything, any AI, and just feed it in there, and it'll give you your exact stats like these other platforms would. It's as easy as that. You just have to note down like these different items, and it should be able to tell you pretty much uh, all your things, and it can even probably analyze it better than one of these platforms can. It can tell you what you're doing wrong the most, and it'll be able to analyze your post-trade clarity, and it'll be able to tell you exactly what you're doing wrong every single time. And it's going to be hard in the beginning to understand what you're doing wrong, but over time, this game is a numbers game. You need to be able to put in more and more and more shots, and then you'll be able to you'll be able to understand more, and you'll be able to gain more skill. And that's basically it. That's all. Okay. Now that we have this out of the way, we've got this bookmarked. We're going to just call it our trading tracker, and we'll make sure that we're noting down every single day after we're trading what we felt before, during, and after, and all these other things about our trades. And we'll tell you how to do that afterwards. But next thing I want to do is I want to show you guys some of the things about the contracts. So as I showed you last time, we have NQ and ES. Those are the two pairs that we will trade. The S&P, and then we also have the NASDAQ. There's two different types of the NASDAQ and S&P. The NASDAQ and S&P that I told you guys to bookmark last time was these two indexes right here. NQ1 exclamation point and ES1 exclamation point. These two are the, let's say, big boys of the trading world. These contracts are worth the most, and you have to risk a lot to be able to trade on them. Normally, when you're trading low capital or when you're trading funded accounts, it is not ideal to be able to trade on these because you can't get as many contracts. You sometimes can't close partials, and yeah, it's just it's more ideal. I like to trade on what we call micros. So it is a smaller version. You don't have to have as much money to be able to trade on them, and then they are just starting with an M. So M for micro comes up as micro, E-mini, S&P. You can just search up MES, and it'll come up right here, MES1, or you can just search up MNQ, and boom, right here. It's by CME Group, and you just drop it down, MNQ1, that's the auto rollover contract. So trading is within contracts, and I'll show you that. Actually search up NQ1 current contract. We're going to scroll down to this one right here. We're going to see the E-mini NASDAQ 100. So if we look on the charts right here, we have what I told you guys to bookmark out last time, the mini contract. We have the NASDAQ 100 E-mini future. And we also have what? The S&P E-mini future. We're going to search up on our web browser just to show you guys this. We can see our contract code that we have right here. That is the contract that we're currently in. And if we come over here to NQ1, whoops, NQ1, and we drop it down, not NQ1, just NQ, drop it down, we can see that we have the M2026 right here, M6. This is the current contract that we're in. We're in what? We're going into June. So this contract is going to roll over, I believe, at the end of June or something like that. But that is how this is going to be. And then the next one after that is going to be U. And then that one's going to expire in September 2026. And then we also have Z, which is December 2026. So yeah, I believe it's literally just like quarters, like how companies have quarters. It is just exactly like that. It has different codes based on the time of the year that we're in, and then we just cycle those at every single year. And right now we're in 2026 M6. Okay, so next thing that I want you guys to see is if we come over here to the specs calendar, we have the outright right here. So this is going to be the amount that we have every single time that the price moves. So we have 0.25 index points for the NASDAQ. This is going to mean that every single time that oh, I just opened my trading platform. Every single time that price moves literally this amount, like you can barely even see it from my mouse. Every single time price moves one up, maybe it'll do it. Yep, like that. Every single time it moves like that, we are moving within $5. I'm on the wrong index, but as you get the point. Every time we move up one, we get $5. Literally that amount. Okay, so what does that mean for us? That means that when we are trading, we're only going to be able to have a stop loss. If we do a long position right here, I believe of what, 40 points? Okay. Yeah, if we have a, what, $500 divided by 5, no, we'll have 100. But basically, if we have this amount in our stop loss, what is that going to mean? We're going to need a way bigger extended for our take profits. It's going to be a lot for us to be able to maintain that and be able to target those amounts in like a large amount, like in a large trading amount. If we go over here to the S&P 500, we can have 40 points. But look at how big this stop is. This stop is huge. We're trying to risk $500. That's going to be insane. We're going to have a take profit if we want to get a 1 to 2 all the way up here. It's going to have to be 80 points all the way up here. Yeah, 80 ticks all the way up here to the top of this range. That's going to be really hard to be able to hit consistently when you're trading. It's going to be really hard. So what can we do? We go over here and let me close this. And whoa, don't leak me. Okay, we're going to go back out. We're going to just search up MNQ current contracts. And then what do we come up with? We come up with the micros. We're going to go, yeah, we see the contract code right here. It's basically the same, just has an M in front of it. Go over here to the specs. How much does each index point cost us? It's going to cost a tenth of the price. It's going to cost us 50 cents. I don't actually know if that's a tenth, but you know, it's going to cost us, I think, 10 times less. So every time that we move on the NASDAQ, it's going to be 10 cents. What does that mean? Instead of only risking one contract, which we are only allowed to do on TradingView, only allowed to risk one contract, we can risk like 12, let's say, and then we can make a $500 stop loss really easily, and we'll be able to hit it, or like hit consistent trades, basically back to back to back. Can do something like this, and that doesn't look as crazy, you know? Or if we go over to ES, it's still going to be a little bit more because contracts are worth more, but you know, this is a manageable win. We don't have to go all the way up to the top of this range to be able to just profit on one contract, you know? We can't do partials on a singular contract because we're in one contract. And that's how it works. Okay, so now that we know this, and we can go back out here to show you guys for ES as well, we can search up MEES, and we go to the specs chart, and we see that it's worth literally 10 times less. It's worth $1.25 now instead of, you know, $12.50 like it used to be. It's worth 1.25, and then NASDAQ is worth 50 cents. So I think it's a lot more beneficial to start out trading on micros instead of, you know, trading on the big boy contracts where you need a lot more capital to be able to, you know, play in these ranges. And, you know, maybe if you're starting out with 150K accounts, 100K accounts, then maybe if you're a big baller and you just got money to blow like that, then you can. But most people are going to start their journey on trading funded accounts worth $50,000. And I will show you how to actually get set up for how we're going to start trading before we learn any more strategy or anything else. So what I'm going to want you guys to do is, you saw me click up here, trade, and you're going to click this one where it pops up with trade with your broker. You're going to click this, and you see all these different brokers come up. You know, you could set up a paper account with literally any single one of these brokers, or as we see, you know, TradingView is pretty nice. They got one set up already for us. So we can just click this, paper trading. You're going to click on connect. You're not going to need to connect anything. I think I've made a couple of accounts right here that don't make any sense. Yeah, Millie ticket. I don't know what to say about that one, but let's just create a new one. Anyways, we're going to create it with $50,000 inside of our account, and you can name it whatever. just name it test for this moment. You're going to set the USD to the currency, and you're going to come over here to where it says leverage. It's going to max that bitch out. 500 to 1. You can trade a lot of leverage within brokers. I don't know actually how much it is on prop firms, but it has to be something like this. It's either 200 to 1, 300 to 1, or 500 to 1. I don't know what it is, but that is how much you're going to want to put on there for futures. And then we can click create. Boom. Okay. So now we can see we have a bunch of shit here. We have the $50,000 account balance, the equity, the realized P&L, the unrealized P&L, the account margin, all these other different things that we don't really need to worry about. But we have our things set up here. And then if we wanted to, we can just like minimize this, collapse this panel down here, and it just pops up right here at the bottom. You can click on it again if you want it again. But here, it's going to show up with another trade button, as well as the one that we already have in the top right. So you can click this, and it's going to bring up our order panel right here. This is what we're going to be using to be able to place trades. And then you can see right here, we have a stop loss, and it says drag to add your stop loss, and a take profit to drag to take your take profit. What we're going to do is with these tools that we had last week, we're going to be able to mark out our positions on the chart. So let's say right here, it looks like price is going to go up. I'm just doing this as a test. Don't actually do this if you want to actually be trading on your account. You don't want to gamble. You know, we're going to throw this on the chart. I'm just using the arrow keys on my keyboard to be able to move it around like that, as you can see. But we're going to say, you know, this is where I'm going to enter, and, you know, maybe this is where I'm going to TP up here. Okay, I'm going to drag the stop loss down to this point right here, where I just dragged this tool. It has these editing things on the side. Drag this up here. Okay, so we see, and then we're only trading one contract here. We're on the NASDAQ. We're not wanting to trade that. We're wanting to trade mini or micros. So I'm going to click this again, buy, drag the stop loss down here. Wow, that's a lot. We're going to say, we're going to change this from units to risk, USD. I suggest that you guys do this as well. And you just risk $500 every single time that you're trying to trade. Why? Because we're going to be trading 1% of our account every single time. And this is normally how you're going to be doing it on a funded. And then let's say that we wanted our TP up here. Up here. Okay. We can see that we can click buy. Okay. Now price is going to fluctuate, and we're going to see, hey, are we going to get stopped out of this trade? Or hey, are we going to maybe make a bit of bread? We can move our tool like this to show our position. This is how our trade is going. You were going to lose $369. I didn't set up the risk properly for 500, but yeah, this is how it's going to play out basically. Boom, confirm. And if it hits up here, we're going to make $760. Looks like we're going to get absolutely stopped out of this position because I gambled it, but you get the point. And then as we can see right here, we can see our unrealized P&L is going down, and we have a couple of active orders right here. But this is how we are going to basically be able to set up our trades on TradingView. As you can see, we're not only taking just one contract that we would if we were taking a NQ trade, NQ1 exclamation point. We are taking 9 on this order because we are trading micros. So inherently, when you're trading micros that are worth way less money, you're going to be trading a lot more contracts. And then, as you can see, we can make our stop loss even smaller or even bigger, and it will be able to auto adjust the amount of contracts that we can trade. Okay. Basically, this is all that we need to know as of for now with how we're going to trade. You're going to accept wins and losses either way. We'll get into more on how to take trades later on, but this is basically how you're going to set up and be able to start trading on TradingView. Let's see if we get hit out here. We'll just move the stop up to here. Don't actually move your stop loss if you're trading, but see if we get hit. Okay. Hello? Yeah, I don't know. We got hit stop loss. Bam, whatever. Okay. yeah, was a short and sweet little video on how to, get yourself set up with TradingView. Okay, why don't we go into how to actually learn some strategy in the next video? Okay, we'll see you over there.